Hi, everybody. Let me turn my phone off. Everybody always call. As soon as I hit that go live button, everybody always start calling my phone.
Mhm.
So today is the day for small businesses and entrepreneurs and herpreneurs and whatever kind of preneur you are. Before you start a business, one of the first things that you need to do is to determine if you selected the correct business entity. Some of you all are just opening up and pop up, surprise! I'm a business owner. Here's my business license. But you skip the most important steps, and that's selecting your business entity. Um, yeah, you get your business license, but have you done a business plan? Do you have a business bank account? Have you
Mhm.
done your market research? Have you performed your SWOT analysis?
Mm.
Do you know your exit strategy? Is it your passion? Like, these are some of the questions that you all need to ask before you just pop up and open a business. So today we're not going to answer any tax questions. It's all about the business owners today. I have my good friend Josie Harris Walton. She's a tax attorney that I met a few years ago, actually at a tax conference. We met at a tax conference. She's going to give you all a bit of details about selecting the right business entity and she's a business owner as well, so she can give you some insight on what it's like to be a successful business owner.
Yes.
So, without further ado, I present to you my good friend, tax attorney Josie Harris Walton.
Hi, everyone. I'm so glad to be here today. This is awesome. I think this is such an amazing platform that my good friend Melinda has put together. What I want her to do is I'm going to introduce myself. Again, Josie Harris Walton. I am a tax and corporate attorney in Atlanta, Georgia. My practice areas consist of in-house corporate counsel for businesses. I also handle their tax litigation, their tax audits. I handle tax resolution, any corporate issues that they may have. And that's kind of in a nutshell of what my firm does. The reason why I'm so passionate about small businesses, I'm so passionate about businesses, this period, because we're the ones who run this country. We are They're built on our foundation. But what I hate to see is business owners not knowing what to do. Either they're starting their business or they're trying to grow their business and not sure what to do. So I have kind of made it my mission to help business owners, like sort of like a business tax coach, to understand business itself, because I know you guys understand your passion. You know exactly what you want to do. You know what you're doing. The problem I'm seeing is business owners not knowing what entity they need to be, not knowing how to run the administrative part, and not knowing when it's time to bring in somebody to handle all that when you can't handle it. So, with that being said, Melinda's going to ask me a couple of questions, and I hope you guys have questions as well. And give me anything so I can answer. If I can answer, I'm gonna research it and figure it out for you because I want you guys to be successful. So I'm gonna turn it over to Miss Melinda, and she's gonna ask me some questions, and we're gonna go from there.
Okay, so before I get into the viewers' questions, I want you to answer a specific question that I found people haven't researched or you just see all these memes and all this business advice on social media. For instance, I saw a post a few days ago saying, "Okay, y'all got y'all stimulus checks, y'all get y'all tax check.
Oh yeah.
Business owner, go out and get your LLC and do this and do that." And I'm like, "No, wait. How do you know
I saw
that
that too.
supposed to go and get an LLC?" So if you could kind of educate the viewers on like the difference between the different entities, like a LLC versus a corporation,
Yes.
and why or what makes you eligible for LLC or corporation?
Okay. Okay. So, and I'm going by this from Georgia if we have other states online. But most states are pretty much the same. I'm barred in Georgia and Alabama. So those are kind of my niche states. But your state probably will have the same thing. Every state has what they call a Secretary of State. And that's where you need to register your business with. So let's talk about the different entities. Let's talk about the sole proprietor. So we do have a sole proprietor. The sole proprietor is where you are pretty much, you're not registered with the Secretary of State. You're not saying you're a company. You're just a sole proprietor. You use your social security number, which I do not recommend, but you use your social security number and you use yourself as your business. You are your business. And so, use your, you don't have you can have an EIN number, but most sole proprietors, I don't see them having an EIN number. And so pretty much you are yourself. Now, the issue is if someone sues you, sue your business, they're going to sue you personally. They're not going to sue your business. So that's why I always recommend my clients register with some kind of entity so that they can separate themselves from the business. So the first one is an LLC, which is a limited liability company. That is where you register with Georgia or whatever state you're in, and you consider yourself a limited liability company, and you are a member of that company. And so you have separated yourself legally from that from that company. So which means that if anyone tries to sue you or anything happens or you're doing a contract or whatever with someone, it is under that company, not under you personally. And so that's what I'm looking at as the legal aspect, which also you got the tax aspect as well. But I know Melinda has already taught you guys about that part. So I'm just going to talk about the legal part. So technically you separated yourself. Now, that is an LLC, which means that, of course, you file that on your Schedule C tax return. Now, if you're an LLC and you're also two or more members of that LLC, you're considered a partnership. Or you can actually register as a partnership, which you can register as a limited liability partnership, which a limited liability partnership is you have like one general partner, and then you also have maybe some limited partners. So which means you have a partnership agreement with those people, and please do a partnership agreement. If you are a partnership, you should have a partnership agreement which says, I own this amount of the partnership, this person owns this amount, I'm a general partner, they're a limited partner. They also are, it also tells what each partner responsibility in the company is, what happens if the partnership dissolves. I've seen so many partnerships where they didn't have a partnership agreement, and then the partnership dissolves because you can't work it out together. And what happens? Those partners end up fighting in court. And so what the judge is going to do, he's going to listen to everybody's argument, but he's going to go off what the law says. And the law says that it's 50%. Georgia law anyway says it's 50% for partnership. So even if you were supposed to be 70%, you only get 50% because you don't have a valid contract. As well as I've seen where one partner died and of course they dissolved the partnership because the other partner died. There was no contract. What happened? The wife came in because now she's owning, because estate issues, she is now owning that partnership. And you had to be a partner with somebody you didn't even want to be a partner with. And what the wife did was she dissolved the corporation. There was no contract, and she got the money. She got that partner's money, even though I don't know what the situation was regarding that issue, but it's so important to have a contract, a partnership agreement. So that is kind of a partnership. And then you have a S corporation. But S corporation is only for tax purposes, which means you file a form 2553. You would tell the IRS, I want to be an S, I want to make an S election, and you become an S corporation. Now, I love S corporation because there is so many tax benefits to it. But the one thing I cannot express a lot about is with S corporations, you have to be an employee of the company, which means you have to pay yourself as an employee of the company. And you have to file what they call employment payroll taxes. And a lot of people do not do that. So I had a situation where I had to represent a young lady who was an S corp. She did not file payroll taxes, and what they did was they filed payroll taxes for her. And they took it all the way back 3 years because, of course, the IRS can go back 3 years. So they went back 3 years. She filed 941s. She had to pay penalties on those 941s. She had to pay Social Security and Medicare taxes on all that money. And she ended up owing so much money. And unfortunately, she had to close down her business because of that. Only because she was not advised. Now, I know Melinda gonna tell y'all, because she advised y'all on a lot of stuff, baby. You better believe it. She don't play when it comes to that. That's why I love her. I bring my clients to her because of the fact that she does not play.
Yeah.
She will tell you the truth, whether you want to hear it or not. A lot of preparers don't do that, and they don't tell you, hey, it's okay to be an S corporation. I like it because you can get a lot of tax benefits, but you have to be ready to be an employee of that company, or if the IRS audits you or anything happens, you're going to be stuck with a lot of things and a lot of penalties and interest, and that's huge. And like I said, I don't want anybody's business being closed down because of that. The last one is a C corporation. A C corporation is by itself. It files its own tax returns, and you are a shareholder of that company. And also, let me go back to S corp. Once you elect to be a S corp, you're a shareholder of that S corporation as well. So shareholders mean that you own shares in that company. Most people have shares of 100. I have some clients who do 10,000 shares, 100,000 shares, and then you own all those shares. So whoever in the company owns all those shares, you are now considered a shareholder, not a member, not a partnership. You are a shareholder, which means you are separate from the company. And with a C corporation, you can be double taxed.
Yeah.
Because a lot of people say, oh, I want to be a C corporation because I'm separated and I file taxes, and the company pays the tax. I don't have to worry about paying any taxes. Not true. Because what happens is, if that C corporation, as a shareholder, if you get distributions, that's what it's called, distributions. If you get distributions from that C corporation, you're going to be taxed on those distributions, and then the company will be taxed on its income. So you could be double taxed if you're the only shareholder of that company. Mm-hmm. So, think about that when you're thinking about certain entities, as well as with a C corporation. What I've seen is I have an audit. Well, actually, a litigation is no longer audit. Where the C corporation shareholder, she was only shareholder in the company, and she was not taking any income, any payroll taxes, any income, and she was also the company was making money. So what happened was, the IRS said that she now has a distribution, and they apply $50,000 to a distribution of hers. And therefore, the C corporation could not take a deduction from that $50,000 distribution. So she was taxed on that money, but it could not be a deduction from that corporation. So, and now she owes that money now, because she pretty much had $50,000 that was out there, only because she did not take shares and she did not pay herself payroll. No, I'm sorry. She paid herself $12,500.
The standard deduction.
Because, of course, and this is my thing, she didn't know. She didn't know. Somebody advised her on that. And so when the IRS audited her, they came back and they said, there is no way you're living off $12,500. Right. There is no way. Her rent was $900. And so what they did, they estimated $50,000 of I think it was 30,000. 30,000, and then it was 12,000, which she already had taken. So it was about $50,000. And so she got taxed on that. And now her company couldn't even take the doggone expense.
And so let me clear something up on that before you move on, because I talked about that I think 2 weeks ago. So for the people that were on when I talked about hiring your kids and just paying them the standard deduction amount, that's not what Josie's saying. She's this example that she's giving, this person paid herself only the standard deduction amount. You can't survive off of that.
You cannot. And y'all don't know, but I know y'all know, but the IRS is not crazy.
Right.
When you get out and they look at all this stuff, I have, and this is off topic, but I have a situation now where they're looking at this person's Facebook. They're actually, I can't believe she was on there looking at. Do you have time to really look at somebody's Facebook? They're using our money as all these resources and going in and looking at somebody's Facebook page. That was so sad to me, but that's what they're doing now. They're trying to see what you're doing. So she had she said her business was dissolved, right? And that the business, there was payroll taxes, and the payroll tax needed to be depleted because of the fact the business was closed.
Mm-hmm.
That's what she said. Well, go on Facebook and there is a Facebook, post for her. But the good thing about it, she posted back in September of 2020. So therefore I can dispute it and say, hey, she was, she closed the business down in October. So therefore this was the only the last post she had, but they still went on there and looked at her Facebook page. I could not believe it.
The people don't understand how serious audits are. Like, they will really come to your business. If you're claiming those home office deductions, they will really come to your home.
And per law, they can do that because of the fact that you're claiming a home office. So They need to see that home office. Because one client was like, oh, I don't understand why they come in my house. You have a home office, you said, in your house.
Yeah.
They're required to look at that. But I mean, I'm off topic, but yeah. So those are the entities that the Georgia has. So what you need to do as a business owner is figure out what entity is best for you. Most people do LLCs when they start off. Nothing's wrong with that. My issue is that if you're trying to grow, you may grow out of an LLC. Right. So I always tell clients, go for the entity that you're looking at 10 years from now. Right. Therefore, I don't have to do a conversion, because I've done conversions in Georgia and it's no joke to do a conversion. Ask Georgia to convert you over from an LLC to an incorporation. So I always tell clients all the time, everybody want to be like Coca-Cola. Well, start acting like Coca-Cola.
Right.
Coca-Cola they started off as an Inc. And I'm not saying everybody do that, because LLCs are great. But understand, if you're trying to get to that next level, you may have to do a conversion, or you may have to do an S election, which means that everybody's not ready to pay themselves. When they first start out, you're not ready to pay yourself. But one little caveat I did find out was, if you want to pay yourself, like, let's say I can't pay myself $100,000 salary a year, but you may be able to pay yourself on commission. The problem is no one wants to take out that employment taxes on that commission, so they decide not to even worry about paying themselves. But right now with the PPP and all that stuff, a lot of people wish they had to pay it themselves for it, because I don't want to get into the PPP loan, but a lot of people are saying, oh my God, I missed out on this money because I did not pay myself, or I did not make any net income. But now, he changed it and it's now gross receipts, which is great.
Yeah.
People can do for the PPP loan, but also you had to be registered. They wanted you to be registered on the Secretary of State as an LLC or something like that, or have an EIN number for your company. If you didn't have that prior to February, you didn't get to take the PPP loan.
Which that's February 2020.
2020, yes. February 2020, you were not able to take it. So my thing is, if we're going to be a business and we're going to be about our business, let's act like a business.
Okay. Yeah.
And I cannot stress that enough, to act like a business. So that's kind of my spiel on the entity structuring, but you do need to make sure you know what entity structuring that you want to be, and talk to your accountant. That's what they're there for. Talk to your, do a consultation with an attorney. You don't have to hire that attorney to do a consultation with them, and they will tell you, okay, well, because you're trying to do this, maybe you should do this. Or if you have two people, you need to set up as a partnership, not an LLC, and things of that nature. So that's kind of what I do on business coaching wise. I like to coach people about how to set up their business, or if they're moving forward to another entity and they want to do another entity, what is that and what does that look like? And also, by me being a tax attorney, I can kind of tell you the implication. Now, I can't do the tax returns. That's Miss Melinda. She is the boss of all that. But I can tell you, okay, you set it up this way, and this is what you'll be taxed on and things like that, because people have no idea about self-employment taxes.
They don't.
People have no idea about estimated taxes.
Yeah.
Like I stress it so much. Pay your quarterly taxes if you're an LLC, and if you're making you have a tax liability over $1,000. Pay your estimated tax. That way, you don't have to worry about paying them at the end of the year, or you can be penalized for not paying them.
Yeah.
If they come back and they audit you. And a lot of people say, "Oh, I'm not going to get audited, Josie," but that is not always true.
Right.
All right, I'm sorry.
Say that when you see these LLCs having to pay all of this self-employment tax, sometimes they're better off being an S corp or a C corp because you don't have to pay all those. Like, just imagine if somebody had grosses $1 million, in their LLC? I don't think they understand how much self-employment tax that is.
Exactly. And then the thing is, that's not even including the income taxes.
Right.
So you got 7% on. So to me, that's double taxing yourself.
There you go.
That is double taxing yourself. But people are not talking to these, consultants and accountants and attorneys to know that you can be taxed. Because I know Miss Melinda can give you guys a synopsis of, okay, if you're an S corporation, what you will pay. If you're an LLC, what you will pay.
Mm-hmm.
But we wait till the tax year and then we say, oh man, I got to pay all this. I can't afford to pay all these taxes.
And it's because they don't tax plan and they don't go to NC tax advisors or tax attorneys.
Yeah.
And a lot of people think that they can't afford a tax attorney. Give us some info about that.
So me personally, because I love business owners, I love what I do, I actually have a 30-minute consultation. You know how much stuff you can get out of me for 30 minutes? Look at me talking. I love to talk. So for 30 minutes, you can get a lot of things out of me, even if you decide, now don't get me wrong, I want to represent you, but also you have tax attorneys and business attorneys who will put you on a monthly payment plan, like a monthly plan where you paying them a certain amount of money a month, and you can call them and ask them any questions you may have. You also got, even though, they may not know a lot, I don't know, but they got legal services out there that actually, if you pay them a certain amount of money a month, like Legal Shield, they will, they'll answer any questions, because you may just have questions. But when it's time to implement, then of course that may be a significant amount of fee. But I work with my clients. If my clients cannot afford, because what I want to do is make sure that you're doing what you need to do. Therefore, when you come back to me, if you get in an audit or you get in litigation, I am there to help you, because me and the accountant that is, working together, we know what you need to do. And it's you don't have to spend all that money in litigation costs, because we've already kind of assessed we've been dealing with you for years. Mm-hmm. And people don't understand how important that is to deal with somebody over that amount of time. But tax attorneys are not that expensive. And people are like, oh, I don't have that much money. My business don't make that much money. But you never know when a good tax planning can do for you. You have no idea. It can save you thousands of dollars.
That is true.
That's kind of my, what I feel. Like I said, I'm willing to help. And then also things like this live seminar right now that Melinda's doing every Thursday at 12 o'clock is amazing. You know how much stuff you can get off here, and it's free. It is free how much coaching you can get off here just by her bringing on people and, like me and things like that. So take advantage of those different things. I speak a lot and take advantage of that you can come in and, listen to me talk and ask me questions at the end.
So what are some of because just like a tax preparer and any other professional, you can't just pick up the phone and call any old tax attorney. Mm-hmm. What are some of the things that they need to look for when considering hiring a tax attorney?
I think, to me, the biggest thing is experience. You want someone who's been practicing a while. You want someone who, to me, personally, and like I said, I don't know about other tax attorneys. I want someone who is willing to first find out my issue before you quote me a fee. Right. Because I don't know. I want somebody who can analyze my issue and say, hey, this is what we need to do. These are the steps that we need to take. And then, of course, I say, this is how much money I'm going to charge you to do that. Mm-hmm. So I think also look for someone who has experience, who knows the tax code, because the tax code is a beast. And we go to seminars, we go We do CLEs, y'all do CPEs. We do all that stuff to get you prepared. We're always doing research and figuring out, okay, like Melinda, like last week, Melinda did the seminar on the new tax code. That's huge. You want somebody who's doing that research, who knows what they're talking about, and you don't, a lot of people go to resolution companies. I am not a fan. I will say it on live Facebook. I am not a fan. And not because of the fact that they don't help people, because of the fact they don't tell people going forward. Like, I know your issue right now. What can we do going forward? Well, you don't ever have to get involved in this again. You know what you're doing. So you want somebody who's going to teach you, who's going to coach you. And that's what you're going to look for in a tax attorney, as well as you need to make sure you guys have a good fit. That you are fitting them. That's the reason why I do consultation. It's not just because of you guys. I want to know if we're going to be a good fit. I need to know if you're being unrealistic about your expectations, and make sure that we're going to be a good fit and we're going to work together. I always tell people, I don't actually, my clients don't hire me. I work with my clients. I work with them. And going forward, even if your case is finished and I'm closed the case, you can call me and ask me a question about that case, because I know we work together. I just had one call me this morning out the blue. He missed the payment. He was like, Josie, the case is closed. Like, Josie, what can I do? And I told him, this is what you need to do. It's not lost. They're going to terminate your installment agreement unless you pay this amount of money. Go ahead and pay that amount of money and they won't terminate your agreement. Other than that, he wouldn't have known what to do. So you want to keep a relationship with your tax attorney. You want to make sure you have someone who has a relationship with you, just like an accountant or, a tax preparer, a services, a consultant. You want to make sure you're establishing a relationship with them. Mm-hmm. And that's what I look for. So those are kind of the three things I think, you should look for in an attorney, a tax attorney, or, even an, accountant or tax preparer.
Yeah, absolutely. So aside from being a successful tax attorney, you're a business owner first. What are some of the challenges that you face as a small business owner?
Well, I think one of the things, and I think every business owner kind of faces this, is keeping your personal and separate thing financial wise.
Wow.
Separated. I don't know how many times I tell people don't commingle funds.
I talked about that last week too.
Do not commingle. And this is the thing. I'm gonna be real with y'all. As a business owner, sometimes I'll be like, man, I need to go ahead and pay for this. And I got my card, my personal card in my hand, but I'm like, this is a business expense. I cannot do that. I will go transfer money, get the money out of the bank account, do whatever I have to do. So I will not commingle funds between my business and my personal. And that's the main thing I feel like I struggle with. And that's any small business.
Right.
You're like, look, I got this business card. It's already, let me go ahead and go to Victoria's Secret because I got the card right here. But I'd rather just pay myself, transfer the money. And that's hard. That's hard to do when you're a small business owner. As well as, the main thing I'm working on right now is my marketing. Mm-hmm. And that's been one of the hardest things because I don't have the time. Yeah. I am a tax attorney. I have clients out the wing. I'm a business attorney. I have clients who need me. So therefore, I don't have time to market. So what I've done is I've decided, you know what, Josie, you cannot do this any longer by yourself. I have hired a marketing person. And don't get me wrong, it was the hardest thing to do because we ain't got that type of money.
Yeah.
But you know what?
An investment.
Exactly. It was an investment. I even invest in it now because I need more clients and I know what type of clients that I want. So in order to get those type of clients, I have to hire someone to be able to help me because I know. And that's when I think the best thing about a business is when you say, you know what, I can no longer do it anymore. And you decide, you know what, I am going to hire someone. And that's when you know you're a business owner because you say, I know when my line is and I can't do it anymore. And I've gotten to that point on the marketing. So those are the kind of the challenges that I have. But yeah.
Yes. That's crazy because this year I've just decided that I'm going to focus more on small businesses, period.
Okay.
I have dismissed clients.
Wow. Now that's huge too. When you can say, you know what,
It's
I know
hard.
what I want to do. I'm focused, and this is who I want.
Yes.
Yeah.
You have to make that decision, especially it's not saying that I still want cater to or provide services for my lower income clients. But if you're more of a headache and a liability than an asset for me,
Yes.
you gotta go.
And such a good analogy, is that an asset or a liability. If
Yeah.
something is a liability, you need to figure out how to remove it or make it an asset.
Right.
Because if you don't, it's going to always hinder your business.
Right.
Yep.
Okay, girls, we'll talk all day, y'all. So we
I
jump
know.
in. Let me look at some questions. Okay, I have a question from someone that says her husband and her are they have a business together. Should they be a partnership, or since they're married, do they need to become a partnership?
Yes, I recommend it. I recommend it. And I'm not saying anything's going to happen in your marriage, but if you are, you get divorced, then that partnership agreement tells what needs to be done. What happens? I get 50%, or, I decide to sell him the company or her the company or whatever. Even as husband and wife, I recommend doing a partnership agreement. Even if you're an LLC, I recommend doing a partnership agreement. And it's not anything but we have to know how to keep personal from business.
Right.
And I know it's hard when you're husband and wife, but I've seen it where in a divorce decree, the judge was able to decide who gets the business. Really? When I've been working in this business as well as he has, and he gets to keep the business because of these things that he had, his attorney had. No. Here's the contract. And honestly, a judge is always going to look at your agreement. They're always going to, unless you don't have one. And then now you letting the judge make the decision on your business. And now that person gets to buy you out. Maybe I don't want to be bought out of the business, or maybe I want the business to be sold altogether and we both start a new business. And that's all can be outlined in the partnership agreement. So yes, I recommend it.
And to piggyback off of what Josie is saying, for tax purposes, you want to document that both of you have some activity in the business. One reason is because if, let's just say that you're an LLC and you file a Schedule C and everything is in your name, when you pay your self-employment tax, that's only for you. You're not paying into your husband's self-employment tax.
Oh, wow.
Two Schedule C's. You want to split up those expenses and you want to split up that income between you and your husband. I see that a lot too.
Wow, I never knew that as a tax attorney. That's huge. That's really a good tax planning to do that, because it may, like you said, it doesn't go into your Social Security.
Right. Yeah.
Okay.
So I've been advising people on that. When I get new clients, which I'm starting to get a lot of new business clients, I like to audit their prior year tax return first to see what I'm dealing with. And that's one thing that I've been seeing from a lot of business owners. Husband and wives have businesses together, but the wife name is on everything. Like the husband don't even exist. He just probably the behind the scenes person with all the money. But we need to pay into the husband's Social Security too, because if he passes away, ain't paying into no Social Security, you stuck.
And to piggyback off that, if a judge see a tax return where the wife's name is on everything, who you think they're gonna get a business to?
Yep.
Yeah.
Yep. Okay, let me see if we got any more questions. She says, oh, what happened to it? It was a question about an EIN. Do you see that question about the EIN? Oh, there it is. She said, if I have an EIN for my business already, how can I get one under my daughter business? Or will I put her personal info or mine?
So I don't recommend putting the personal information on that. I recommend registering as an LLC or an S corporation and then setting up the EIN under the business name. That's what I would do. I wouldn't, I would now maybe the daughter, I don't know if I'm assuming maybe the daughter's younger. And so she's trying to establish a business for her daughter. I'm not sure if that is the case. Then what I would do is I would, either do an LLC, make her a member because she can.
Mhm.
And then also you would have to be under the EIN number, but you need some kind of way to establish that she is a owner of this company.
Is there a certain age limit on getting the EIN?
It's probably most likely whatever the age limit is for contracts in Georgia, which I think is 18. Therefore, that's probably why she can't get the EIN number under her Social Security number. And also, the IRS always establishes whether or not that you are who you are. Which because you file tax return or anything like that, it's probably better if she gets it under her name. But I do recommend that she puts her daughter on there some kind of way, like as a member, or if you're doing an S corporation as a shareholder. That would probably be really good to have your daughter have shares in her, in the company, and have so many shares. But until she gets to a certain age, she probably cannot establish the EIN number herself.
And it sounds like her daughter has a separate business. For those of you that aren't aware, you're supposed to get an EIN number for each business.
Yep.
You can't get one EIN number and you got a boutique, you got a hair salon, you got a tax service, you got a laundry service. Because y'all doing it all this year.
I'm telling you, and I love it. I love you guys have
that out of them. So for all of those different businesses you have to have a different EIN number, and you can't put all of that on one Schedule C, please.
You have no idea how many times I had somebody got audited and they was like, "Oh no, this is for this business."
Yep.
You should have did a Schedule C1, a Schedule C2, a Schedule C3, a Schedule C4. How many Schedule Cs you need to do, but they need to be separated. That is the reason why they give you that business code, that SAIC code, is because you're saying. And then also you don't realize that. For instance, I had one client who had a home-based business. It was something that they didn't have to travel, but they had travel mileage. He was like, "Oh no, that's the other business." That, to me, that could be an audit, because the IRS says, "Wait a minute, this business, you don't have to travel to do that.
Mm-hmm.
Why would you travel? So why would you have travel expenses?" Boom, there you go. There's an audit. So sometimes but when you're not coached and you don't know, because you have a lot of preparers who just put whatever you got on your Excel spreadsheet, that's what they're gonna put down. They're not gonna coach you and ask you these different questions, and even though I also represent preparers in the penalties. I'm out of those now because
due diligence.
Question.
Yeah.
Mm-hmm.
Okay. I think this question is for me. She asked me to explain market research. What do I mean by market research?
Oh, that's a good one.
At the beginning of the live, I named a few things that small business owners should do before either considering opening a business or just getting started. And one of them was market research. A good way to explain market research is to give you an example of something I saw that I just couldn't believe recently. So let's say that there's a senior community full of nothing but senior citizens on the north side of town, right? Within this community, they have a shopping center. This person opened a kid's boutique in a senior community. And I'm wondering, did she do any market research? Market research is what it says, researching the market, researching the area. Before you go out and get this commercial building, you need to see what type of people are living in that area where you're considering opening a business. So that's what basically market research is just researching the market where you're considering opening a business. A kid's boutique does not make sense to open in a senior community. Now, if it was a boutique for senior citizens, that would have made a lot of sense. But it doesn't make a lot of sense to open a kid's boutique in a senior community. And it doesn't make sense to Denver, Colorado. They're known for snow and cold weather. it just doesn't make sense to come to Columbus and try to do the same business that you can do in Denver. So you just need to research your market before you decide to open a business.
That's right. Make sure it's not saturated.
Right. Yes,
a bunch of things are already in that area. Like, why would you open two hair supply stores in the same the same area?
right.
So that's kind of, and then I think that's what we all do. We all supposed to do that when honestly, Melinda, that's kind of where the business plan come in.
Mm-hmm.
If you do a business plan, it's going to ask you, have you did your market research? Who's your competitor? Who's your customer? Who's your client? Who are you looking to sell to? And so it means you have to answer those questions.
Right.
If you're doing a business plan.
Yeah, you have to do that SWOT analysis.
Yeah.
We have a lot of boutiques in Columbus. I know we got over 20, and a lot of them are selling the same things, which it's nothing wrong with that. But if I was one of those boutique, I would try to figure out a way how I can differ from that person. Like you got to be able to stand out. Like, what makes me different? What's gonna make Sue come to my boutique versus going down the street and going to Mimi's boutique?
Yeah.
You know what I mean? So we got to make smarter decisions when it comes to business, and we got to stop just opening businesses because we have a few extra coins that we want to invest. And we got to make sure that it's something that we're passionate about, because you will get burnt out very fast if you're just opening a business just to make some money.
That's right. I'm seeing the online boutiques, which, don't get me wrong, I love them.
I love them too.
I would love to see someone open one up for businesses. I'm a businesswoman. I like business outfits.
Yeah.
And I haven't seen anybody to open up an online boutique or a boutique for us, because honestly, I guess people are getting out of the business where I'm not. Attorneys are not. You're not. So you have people who really like to wear our suits and things like that. I don't have to go to JCPenney's or somewhere like that to get my suit. I would love to, have a boutique, someone who specializes in business owners,
right,
who actually like to dress, even men's wear and things like that. So I was like, maybe I should open up one for doing that. I don't have the time.
Right.
So I'm telling somebody out there, if you want to really be different, how about opening up one and doing professional wear?
That's a good niche. And that's what you call the niche. Pick a niche. Stick with your niche. Stop. If everybody is not your customer.
Exactly. It's okay.
Not your customer. You can't market to everybody. You have to pick a group of people, and you have to speak directly to those people.
Yeah, exactly. Because I couldn't market to, someone who's maybe immigration law. Why would I market to them? I don't, there's nothing like inclined except the tax issues, but there's nothing really inclined for me to market to someone, a client like that, because it really doesn't make any sense for me.
Right. Okay, let me see. We have any questions? Any questions, Matt? Let me check all pages. How do you know if you should start a LLC or a S corp? They probably missed the first half.
Mm-hmm. Okay, so I personally, and it's just according to what you want to do. I personally recommend if someone's starting out and you're not making as much money, then, maybe you could be an LLC and then opt in to be an S corp later. But if you're making, over $100,000, I don't recommend you being an LLC, because Melinda and I just talked about self-employment taxes. If you have any money left over after you pay all of your business expenses, you're going to be taxed on self-employment taxes. And then you have to add that money to your income and you're taxed again. So if you're making any income in your business, I don't recommend being an LLC. But understand, if you are an S corporation, you need to pay yourself, and you have to pay yourself payroll taxes. That is huge to know. And that's about it. So I recommend, it's according to what stage you're in. If you're in the first stage of your business and you're just rocking and rolling, then, an LLC will be fine. Now, Melinda, I don't know if there is anything regarding some timelines on becoming an S corp if you're an LLC.
You have to if once you submit that app, that 20, is it a 2553?
Mm-hmm.
Once you submit that 2553 to take that election, you have to receive approval first from the IRS. And so they're behind, because I have a client right now. He's waiting, and then he went somewhere else. So he's my client. He's my business client.
Mm-hmm.
When I gave him my fees for it was a C corp actually. When I gave him my fees to do his C corp, he went somewhere else. First of all, they filled out the form wrong, number one. And he thought that once the application got submitted, that now he can take the election to become a C corp. And I was like, no, I got to wait until I receive approval from the IRS.
That's right.
And he was like, well, can you check? Absolutely not. You need the person that you paid to do it.
Exactly, because they should be able to check and tell you whether or not it was approved, because they are behind. I think I filed one in October and I still haven't gotten approval yet.
They are behind.
Yeah. So it's according to your stage. It's according to what stage you're in. But I always recommend first stage, maybe doing an LLC and then going back. And once you get bigger and you're making more money, then go to the S election.
Okay. Question. What about a realtor that's first starting out?
So a realtor that's first starting out, I recommend, you could do an LLC unless you have a partner, then of course you need to do a limited liability partnership. But I still recommend starting off as an LLC because you guys are a little bit different when it comes to well, I don't know about income. I think the only people that's different if you own property. But just as a realtor, then yeah, I think an LLC will be fine in the beginning.
Okay.
That's my recommendation.
We chatted behind the scenes before we started the live on boutique, just retailers on sales tax, kind of get them a mini breakdown of the sales tax that they're not aware of, a lot of them.
So if you're selling a tangible and I'm talking about Georgia, Alabama, because those are my states. If you are selling a tangible asset, which means something that you can hold in your hand, as well as you need to check the state because there's other things that are considered for sales taxes, then you are required to pay sales taxes in that particular state. I don't care if you sold it for $1. If it's Georgia, it's 7 cents on the dollar. So you have to send Georgia 7 cents because for that $1. People do not realize that. And also, if you're selling online, there's so many changes online now regarding selling. If you're selling and you have to ship it to another location, let's say Alabama has what they call a threshold of, if you sell over 200 transactions in Alabama, you ship it to Alabama, or you make $250,000 in Alabama, you're required to now pay Alabama those sales taxes, not Georgia, but Alabama. So you need to, when you are online, that's the main thing. It's changed so much with online. If you are online, you need to verify. If you're going to ship to a state, you need to go to that Georgia Department of Revenue, go under the sales tax exemptions and find out whether or not you're exempt and what you need to do in order to be exempt, because you're supposed to file a sales tax for a sales tax ID number. And you're supposed to get that sales tax ID number and you're supposed to file taxes. Now with Georgia, sales taxes are always due the 20th of the month. Mm-hmm. So if you sold anything in March, you're required to file a sales tax form return in April, by April 20th. If you don't, you get a penalty. Yeah. And if you get a sales tax ID number, you better use it or don't get one at all. Mm-hmm. Because if you don't, they're going to contact you and say, hey, you got a sales tax ID number. We're assuming for the last couple of months you've been doing this, and they make an assumption, and they'll put down $5,000, and then they'll charge you $5,000 for every month you were open with that sales tax ID number, and now you got to go back, or you got to hire a tax attorney or someone to refile that. Well, now I'm not going to refile. I'm going to call Melinda to file it, but then I got to dispute it and say my client never sold anything, even though they got a sales tax ID number. They never sold anything. But you need to understand that's the main thing online. If you're online, you need to check all these states and see what their exceptions are. If not, they will be contacting you.
Yeah, that's good. That's good. Okay, another question. She says in stage one of the business, she's making a nice annual amount of money. She started and registered through the state already as an LLC.
Okay.
They're due for their annual renewal. Do we change to an S corp now?
If you're making, to me, if you're making any income, but this thing, you got to be ready to pay yourself a payroll. So that's the thing. If you're ready to pay yourself a payroll right now, yes, go ahead before that. Well, actually, annuals are due for if you're in Georgia, it's due April 1st. But I think they give you some leeway. What is it, like June or something, before you actually have to pay the $50, and there's a fee. Like I think a $75. It's like $25 to like $75 if you file after June 1st. Yeah. If you redo your annual. So my recommendation would be, if you are ready and you're at the position where you want to pay yourself a reasonable salary, and understand, I say reasonable. That means that what the IRS looks at is, if someone is sitting in that seat with you, what would you pay that person's salary to do your job? And that's how you have to look at a reasonable salary. Also, I always go on salary.com to look at what their salaries are, because that's what the IRS uses. They look at a salary of a truck driver or an attorney or a tax preparer. They always go to salary.com and look at that. So go on salary.com. You're ready to pay yourself that particular salary or whatever your position is and your experience, then I say yes. Move to an S corporation, make that election. The only thing is, you don't realize, if you're an LLC, you're still an LLC, so you still got to file that annual registration. Mm-hmm. But you're now electing for the IRS to make you an S corp for tax purposes. So remember, for state, you're still an LLC, so you still got to pay that registration fee.
Okay. Another question. What if I do not have that business for an LLC anymore? This is the person that asked about the daughter business. Mm-hmm. She said, what if I do not have the business for an LLC anymore? Will I still get penalized for not renewing?
Have you dissolved the company?
That's what I was going to ask.
If you haven't dissolved the company, if you don't pay the amount, they're going to do it administratively dissolve it. But it's going to take a while. It's going to take probably about 6 months before they even administratively dissolve it, but you won't get a penalty unless you're going to reopen that business back up. And if the business does get administratively dissolved, you have to pay a fee. I think after a year you can reopen the business back up, but then you have to pay all the annual registration that you haven't paid for that business while it was being dissolved. So it can be a substantial amount of money. So my recommendation, if you're even thinking about keeping that business, go ahead and pay the annual registration. If not, I would do a certificate of dissolution, and I would go ahead and dissolve that company myself. And you can
even know how to do that, because they went out and tried to do the LLC application themselves. So if y'all just do it right the first time, stop looking at when you have to pay a tax attorney or an accountant or a CPA or a tax advisor or a tax or strategist, whoever you pay to assist you with the startup of your business. Look at it as an investment. Stop looking at it as, she charged too much. Mm-hmm. Is it worth it? Y'all got to start investing in your business instead of just investing in marketing. And you're trying to get on TV, you're trying to get on the radio, you're trying to have this photo shoot. All that money that y'all are paying for all these extra stuff that y'all just be wasting a whole lot of money.
And see, this is my thing. I love photo shoots. I love getting out there and mark. I do, but my business is straight. I mean, it has, and I guess I can say, everybody say, "Oh, Joe, you can say that because you know how to do it yourself." True enough, but I have other clients who do the same thing. I would rather invest in you right now, and then I would go do those other things with my business, because I have had so many clients who went to someone, let's say they're trying to get a contract. The first thing they say, "Hey, do you have an LLC? I need to see your articles of incorporation or your articles of organization." Mm-hmm. And you're looking around like, what is that? Yeah. Or if there's a grant out there, those grants out there, they ask for the information. They want to make sure you are a legitimate company. They're not just going to give their money to anybody. And a lot of people missed out on that because they did not have their business in order. Yep. Their tax returns in order. Their business, they your EIN number, all those things. They want to have a business bank account. For instance, like with the EIDL loan, which I know Melinda don't agree with it, but anyway, with the EIDL loan, you had to have a EIN number.
You did. And a business bank
account.
account.
No, a business bank account. Yeah. You had to have a business bank account, and because you did not have that, you lost out on getting that money.
Yeah.
Even the advance that was a grant, you lost out on getting it because you didn't have a business bank account.
Right. Yep. And a lot of people, so many people called me. Like I had a waiting list.
Wow.
People helping people getting their finances together. I'm like, how are you running a business with no business plan? You haven't filed no tax returns at all. How am I gonna if they come back and say, hey, you didn't have a LLC or you didn't even have an EIN number. You completed this application with your social security number. How am I going to explain to the state that your business was operational prior to, I think that date was February 15th?
Yeah.
If you didn't have none of that in place.
Yeah, exactly.
So scrambling around trying to get everything in place. It's too late.
Yeah, exactly. Exactly.
Every grant that I received, the first thing they ask is a copy of your taxes.
Yep.
If you didn't file taxes or business taxes, you missed out on that grant.
Yep.
Free money. Or they have taxes, but I'm like, where's your Schedule C? Huh? You have a business and you're not filing a business return.
Yeah.
I didn't know I was supposed to. Y'all, and we ain't hearing that no more. Because y'all
No.
Y'all know. Y'all just don't do it.
Yeah, we want to make y'all accountable. We want everybody needs to have an accountability partner, and we're making y'all accountable today. Yes. Nobody's trying to down you or anything like that. We're making you accountable because this is the truth, and this is the reason why we're not getting this money. We're not doing the things we need to do. We're not getting these contracts is because we're missing out on paperwork, on documentation, and that's huge.
Very huge. Okay, we got 5 more minutes. I have a few questions.
Okay.
What if I do not have that business for an LLC anymore? Oh, we just answered that one.
Mm-hmm.
She said she just renamed it.
Oh, she did a rename. Okay.
Yeah. Okay. If I'm understanding your question correctly, if you renamed it, she just go into the Secretary of State and do a name change. She still have the same. It's the same. If you have to file the annual has the same type of business, or if y'all are doing business together, you need to do separate EIN numbers for each separate business that you have. You can't have a kids boutique and a landscaping business all under one LLC. You need to have separate. All under one EIN. You need to have separate EIN numbers.
And if you do have an EIN number for that one you changed the name, you need to let the IRS know that you changed the name. Either you file the tax returns. Actually, I don't know if they do a file tax. I always send a letter to the IRS with the EIN number, tell them I made the change, and sending them a copy of the name change from the Secretary of State.
What's the benefit of changing the name versus just dissolving one and creating another one?
Maybe you're going to do different things in the business now, and you want the name to reflect for marketing purposes. That's the only thing I can think of. Maybe if you're doing you want to change the name for, like, if she's changing it from a boutique and she wants to do an online boutique and she wants to change the name. I don't know, like from a storefront, and for marketing purpose, you want like a really good, cool name. That's the only thing I can see.
So I'm saying though, why not just go and recreate a new LLC and get a new EIN number?
Because it's $100 compared to $25. I don't know. I'm just saying, but that's what it is. It's $100. The name change is $25. The new LLC is $100. So changing the name for that purpose may be, $50.
I don't remember how much that name change is. Okay,
it's $25.
Okay. Question: if you have an LLC already for your real estate business and you want to start investing in real estate, do you need to create another LLC?
So investing, I'm assuming you're meaning as in buying property and maybe renting out the property. Yeah, I would.
Yeah.
Because honestly, remember, renting out property and selling property is under a Schedule E. It's not under a, but if you're a real estate agent, you're under your income, which is a Schedule C. But now you're investing real estate, you're now Schedule E. For that purpose, yes, they need to be two different companies, two different EIN numbers.
Back off of that. I'm an investor. A lot of investors don't know, for each property that you purchase, go get a separate LLC. I don't care if you have 50 properties, get an LLC for each one of those properties. You know why? Because if and when, and I say when because it happens, if somebody comes and sue you for that property and you got all of your properties under one entity, guess what? They're going to take all the properties.
That's so. And I mean, they can name all the LLCs, but what's going to happen is a person like me is going to ask for all the other LLCs to be removed because they know they're not inside of the LLC.
Right.
So I'm going to ask them to remove those LLCs from the company. I mean, from the suit. And also, if you have all these LLCs, then all the LLCs are now responsible. They're all responsible. Now they can actually have you sell all your investment property from all those LLCs. If you don't have insurance and you don't, and the insurance was not enough to pay them the liability that you have now from the courts. Now they can go after all of them and make you sell all your properties in there, or they can make you go after all the insurance companies of all those properties. So it makes a difference. It really does. It's about asset protection.
Yes.
That is the word, asset protection, when you're protecting your businesses.
Yeah. Another question, last question, because it's about to be 1:00. Is there a certain amount of money you must make prior to applying for an LLC?
No, you actually don't have to make any money. You can apply for an LLC.
Yeah. So that's just like Josie said, that's a good starting place, an LLC. Now let me warn you, a lot of you don't have businesses, you have hobbies.
Yes. Oh, there you go.
I don't even speak on it anymore because I could do another 30 minutes on business versus hobby. And that may be something I'll talk about next.
And that's something you definitely should talk on, because I have had a lot of audits where they wanted to consider the business as a hobby because they were not making any money.
Right. Yeah. They just want to take all those deductions.
Yeah.
All right. I think that is it, Miss Josie. That was good. Thank you.
I enjoy. You got to bring me back.
I will. Most definitely. You will be back.
Thank you guys for all the questions. They were amazing. Thank you guys so much for tuning in today.
Any final closings, Attorney Josie Harris Walton?
All I can say is this. I cannot stress enough. Please don't commingle funds. If you have a business, I don't care if you have a business, a sole proprietor is under your Social Security now. Well, actually, you can't do that because you need to have most banks want you to have a register with the Secretary of State, and they want you to have an EIN number. But please open up a separate bank account, because if you get audited, I only have to show the IRS that business bank account. I don't have to show them that personal bank account. Do not commingle funds. That is, if I don't hear nothing else, don't stop commingling personal and business money. Please stop.
If you're a client of mine, that's you preaching to the choir, baby, because that's something I always tell them: stop commingling your funds. And it makes it easier for us as tax advisors, because when it's time to prepare their taxes and they don't keep appropriate books and records, we can go back and pull those bank statements.
That's right.
Yeah,
exactly.
Okay, well, that was amazing. Thank you all so much for tuning in. I appreciate you. I do offer business consultations. You can go to our website at www.mjtax.com and get on my schedule for a business consultation. If you didn't learn anything else from this live today, I hope you learned that it's very important to start with a very strong foundation and look at these expenses that you're looking at now as an expense. Look at it as a business investment.
Yeah.
All right. Well, you all have a wonderful day, and we will see you all next week.
Thank you, guys.
right. Bye bye.